Hello, I'm Angeline Ong, and welcome to this new edition of The Week Ahead, starting the 18th of September 2023. We'll be joined by Tom Sosnoff, host of Tasty Live, part of IG Group, in just a moment. First, let's take you through all the key market-moving events coming up in the week ahead. We start in the US, where we've got the NAHB Housing Market Index, but it has to be said that the main set piece for the week is, of course, the Fed, which we'll get to in a moment. Over in Australia, we also have the RBA meeting minutes, consumer price index from Canada, as well as building permits and housing starts and API crude oil inventories to boot. Then from China, look out for loan prime rates. We've had several data points showing some positive chinks of light in terms of economic data from there, and that's lifted European luxury stocks like Kering, LVMH so far this session. And this continues, we could see perhaps more momentum stemming from this hopes of China starting to finally get its recovery from the lockdowns underway. We've also got CPI numbers out of the UK, producer price index and retail numbers too. And from the US, the EIA crude oil inventories. And of course, that Fed interest rate decision will come after the ECB recently had a surprise hike in rates, but signaled that perhaps it was at the peak of its tightening cycle. Then we've also got details from the UK in terms of public sector net borrowing. Another interest rate decision, this time from the Bank of England. People on tenterhooks as well. Market Watch is saying that we're seeing a revival of inflation pressures, and perhaps this might push policymakers to take more action. We've also got existing home sales and initial jobless claims from the US, along with consumer confidence numbers. These are the flash ones out of the Eurozone. And UK consumer confidence is out on Friday, along with retail sales. We've also got manufacturing services and services PMIs. This is the flash reading out of the Eurozone, UK and the US, and the Baker Hughes oil rig count as well. Let's cross over to Tom now, who's been standing by for us from Chicago. Tom, welcome to the show. I gather it's also on top of the Fed, on top of everything I mentioned, also triple witching in focus over there.
Yeah, well, we love the third Friday of every month, especially the third Friday of every quarter, because for option traders, triple witching is kind of like your it's like your Christmas. It's like your quarterly Christmas. So on the professional side, it cleans up all the balance sheets and it neutralizes everybody's positions. And on the retail side, it kind of wipes the slate clean, plus gives us a lot of stuff to do, heading into the next week. So this has been a very typical SEP triple witching, and it tends to be a strong month, and the market's been strong the last couple of, basically this whole week. And so it's been good trading here in the US. A lot of volume, not too much volatility, but some good individual, equities are moving around. So there's been some decent trade.
That's really right, Tom. We have seen pick up in the last week or so, and it's been quite a strong few weeks for September, which is traditionally not a strong month for global stocks, it has to be said. Plenty of earnings coming out, although the earnings season has, of course, ended, but we still have a few of note. Kingfisher out with first half earnings. They, of course, own B&Q and Castorama. Ocado also out with the third quarter trading numbers. ASOS and Chewy as well. Chewy is going to be interesting, given we've seen many airlines and tour companies saying that perhaps a revenge travel theme is now starting to cool. Dunelm out with full year earnings, Galliford Try and FedEx as well on deck. And watch out for earnings from the retail sector from Next, JD Sports, Fashion, as well, out with first half numbers. Tom, let's get back to you now. We've had a lot of IPO news as well. This side of the pond, everyone's saying, is this the start of a revival? Given we've seen Instacart, we've seen ARM and Mura Therapeutics as well. Is this the sign of a return of the IPO in the second half?
Well, it's definitely a good sign. I don't know if it's a sign of like everything's back to normal. I don't think investment bankers are cracking open the champagne yet and getting all excited that their bonuses are back. But I do think the ARM IPO being a very successful IPO from yesterday, and the stock's about $15, $15 higher than it was at the IPO price right now, pre-market this morning. I think that's a really good sign. I think the fact that a couple of companies, like Instacart and others are, bringing out going back into the public marketplace, and that's getting other people excited. I mean, in the nature of our business is such that you need to keep new companies going public to keep public interest and excitement in trading the stocks and the options. So I mean, everybody from option traders to futures traders to professionals and institutions, everybody wants to see the IPO market come back. Not because we participate directly, in those IPOs, but just because, like just to give you an example, we're launching options in ARM, one day after the stock goes public. So that's a real change from, in the past having to wait, 3 or 4 weeks or a month. So I think that yes, a resurgence in the IPO market is exciting for the business. It is good for all of us, every trader. And I think if that's the case, it's a good sign looking ahead to the next 12 to 18 months.
All right, thank you very much, Tom Sosnoff there from Tasty Live, all the way from Chicago. We're keeping a close eye on the IPO markets. SoftBank's ARM Holdings soaring almost 25% above their NASDAQ daily price on Thursday. For more analysis and market moving events, do look for all our news and special reports on @IGCom. I'm Angeline Ong, and this is IGTV.